Welcome back. You're watching Buy Now, Sell Now on ET Now, show where we get you answers for all of your stock-related queries, perched at the fresh across high levels. That's the markets for you, with support coming in from most of the heavyweights, Reliance, ICICI Bank. You have also the IT pack that's seeing solid run. Add to the list of Bajaj Finance and Axis. They are also supporting the market over the last 15 minutes or so. But yes, the number was flashing on your screen. That's the number that you need to dial. If you are dial, as in you have to message on, WhatsApp message on, in case you want to ask a stock-related query. Remember, each time you write to us, mention your name, the stock that you're looking to invest in, mention that name as well. And if you've already made that purchase, mention the buy price, the quantity, the time horizon. In that way, we will be able to help you better. And today, our experts, Kunal Bothra, is helping us on the technicals, while on the fundamentals, we have Avinash Gorakshakar joining us. A very good morning to you, Avinash. Once again, good morning to you, Kunal. Thank you so much for joining us on ET9. Let me start taking the queries that are already pouring in. And this one is coming in from Ramamurthy, who's writing to us from Bahrain. And he wants to know whether it's good time to buy Petronet LNG and also Titan for a period of 2 years currently. Kunal, what's your take on these two counters?
So I think both the charts are attractive. Good part is that Titan, for example, I think is perched at a much lower end. The stock has been holding on to the support of 3,100. I believe just few days back there was probably a sharp correction which had come back into the stock, but somehow I think there's been good demand for the stock in the recent past. So I think 3,100 could be a good zone where I would believe that the stock should hold on in terms of support level. So that could be a good point where you may look to average further in case the stock tips down to that kind of a point. And same is the case with Petronet LNG. That stock is also looking attractive at this 339 to 340 mark, perched at a breakout already for itself.
All right, moving on to the next query. And Avinash, very good morning. The query that I have for you is coming from Vincent, and he wants to know that amongst Bajaj Finserv as well as HDFC Bank, which stock would you like to select where he can go ahead to do a monthly SIP maybe for the next 3 years?
Good morning, Shristi. I think clearly, both HDFC Bank and Bajaj Finserv, which is the holding company for Bajaj Finance, these are companies, where I believe a lot of upside has already happened. I think HDFC Bank has given a very, tepid kind of business outlook. So I would suggest that even if the investor wants to buy into, let's say, HDFC Bank, it's better that, the Q1 numbers are out. HDFC Bank definitely qualifies as a good long-term bet. But I think looking at the kind of business outlook which has been shared, I think it clearly remains to be seen how the bank overcomes the challenges of competition and obviously slower deposit growth rate. So I would say that, HDFC Bank around 1,500 rupees could be a good bet. I would wait for a correction to come in here because numbers for the Q1 are unlikely to be, solid. And plus the commentary which comes out from the management is going to be very critical. Overall, the banking sector is expected to post a quite tepid show in the Q1. And I think once we get the commentary, I think one will get a better assessment. So I think it's better to enter the stock, when the Q1 numbers are out and the management commentary is also put out. At that time, there would be better clarity. So I think HDFC Bank would be my choice, but post the Q1 numbers.
Avinash, any stock where he can actually go ahead and do a SIP for the next 3 years? Any stock that you have in your mind?
This question is for me. Shristi?
Yes, Avinash, a follow-up that any other stock that you would like to recommend for an SIP?
I think, within the banking space, Federal Bank and IDFC First Bank, these are two stocks which I think, an investor can definitely look at doing an SIP. The best part is that, both these stocks are available at reasonable valuations. Federal Bank has given a decent business outlook and I think has got a very, solid balance sheet, very strong CASA as well as deposit growth rates expected. And I think IDFC First Bank also is one of those banks which is growing very aggressively with a CASA of almost 50% and plus, net interest margins of almost 3.5% to 4%. So I think, in both these stocks, depending on the capital the investor wants to invest, I would suggest that, an SIP year for the next 2 to 3 years would definitely prove to be quite rewarding. And these could be two banks where, the investor can take the benefit from the current price.
All right, this next one is coming from Anand. He's writing to us from Belgaum. Kunal, he has two queries, one on Narayana Rudralaya and the other one is Control Print. I'm not sure if you've tracked Control Print, but Narayana Rudralaya, he already has 30 shares at a price of 1,152 rupees per share. He wants to accumulate some more. He wants to know, does it make sense to do it right now, or at what price should he look to accumulate, and how are the charts looking for the stock in the longer term. And control print, he wants to make a fresh entry.
See, control print I don't track, so I'll skip that. But for Narayan Hridayalaya, I think the charts are quite attractive, and what makes the charts a lot more attractive is that the stock has come back towards its mean reversion point, which is the 200-day moving average. And this is not the first time where the stock has gone to a retracement. I think in the last 4 or 5 years, 2019-20, there have been multiple attempts where the stock comes back, retraces around the 200 DMA, spends some time over there to consolidate, and then the uptrend continues. The stock started off this rally when it was almost at 300 to 400 mark 3-4 years back, and now recently the stock made a high of 1400 plus levels, which means that the stock has been making this pattern consistently, and with the pattern also the stock has been making new highs for itself. So I think in that aspect it's a good stock to hold on to, and especially at current levels of 1230 approximately, where the stock coincides with the 200 moving average, I would suggest to buy.
All right, Kunal. Once again, coming to you, this query is from Gajanan, and he wants your advice on Jubilant FoodWorks. He's holding 100 shares. His buy price is 400 rupees. First query is, what is the target that he can look out for, maybe in the next 15 months to 20 months time horizon? Or would you advise to sell and move out of Jubilant FoodWorks and rather go and invest in Tata Communications?
No, I would suggest a hold on Jubilant FoodWorks. I think the stock has just recently started to get into a breakout. We've seen a very strong breakout for Jubilant Food after almost 3 years of downtrend from 2021, when the stock was at 900, towards a point when the stock recently formed a bottom around the 450 mark. So I think that aspect very recently is where we've seen the stock getting into a recovery, and I believe that this breakout should hold good for the stock over the medium to long term. So I think if you are in for a time frame of at least another 1 to 2 years, the stock could be giving a decent returns from current levels also.
All right, this one is coming from Besati Murli, who's writing to us on Vizag. This one is for you, Avinash. He's asking about Bajaj Finance, 7,300 shares at it is 25 shares at 7,300 buy price. What should he do with Bajaj Finance right now? And this one actually has kind of kept the investors on their toes, right? Because Bajaj Finance, when it corrects, there are some bouts of sharp correction. But fundamentally, you think you should not get worried about this and stay put with this for a bit of a longer term?
I think, Cheryl, Bajaj Finance is a stock which is now a compounder stock. I think clearly, I think in terms of the NBFC space, they have made their position very strong. The company has got a very good asset quality number, plus the disbursements also in the first quarter are pretty healthy. Customer additions also have been good. But I think one thing the investor should note is that, in these kind of stocks, one could obviously expect a moderate return of say 15 to 18%, because these are already identified stocks. So I think, your capital is safe, but price upside is also going to be fairly limited. So I think if the investor wants a bigger upside, then I think he should look at stocks like, Geo Finance, which has entered the financial services space and which is going to create a huge disruption in the financial services segment over the next, say, 2 to 3 years. So if he continues to hold here, I think he should expect decent returns, considering the fact that Bajaj Finance is now already an identified story. And I think, due to this, probably the compounding effect will come in, but expect 15 to 18% returns annually, which is, I think, quite decent for a stock like Bajaj Finance.
All right, moving on to the next query, and Kunal, the next query is from Madhuri, and on the shorter time frame, she wants to know how are Century Ply as well as APL Apollo looking to you? Do you see any upside in the next 3 months, or should she exit in that case, or if you can recommend any of the 2 other names for a fresh buy, but the time horizon is just 3 months?
So I think both the stocks are, just consolidating. So I'm not sure whether there's an immediate trigger which could probably, bring the stock back into a breakout. But I think, one of the, the recent charts, in fact, for both of these names are actually showing just about a retracement around their long-term moving averages respectively. So I would believe that maybe in the next 2 to 3 months, you might not see any major kind of a price action. I would probably, suggest a breakout point over here. For example, for APL Apollo, I think the recent breakout zone or the resistance point is around the 1670-75 mark. So in case if the stock breaks past about those levels, is where you may consider to buy. For Century Ply on the upside, I think 780 is a major breakout point. So these are the 2 levels which you can watch out for. But in case if you are looking to maybe venture on to other names, I would probably recommend something from the chemicals pack, specialty chemicals pack. Aarti Industries is something which is looking attractive at 700ish odd mark where the stock is trading right now. And if you're looking at a slight high beta pocket, then potentially names like Balrampurchini, sugar stocks, they can start to perform pretty well. Praj Industries also has been something which I've been recommending time over the last few months. So I think these are the few options which you can look out for.
All right, this next query is coming from Kurian, who's writing to us from Cochin. He's a senior citizen. Kunal, coming to you once again because he's saying he has 500 shares of Poonawalla FinCorp. He's purchased at 480 rupees per share. He's been holding on to the stock for more than a year, but the stock has been falling off late. What should he do? Should he exit, switch, or hold for another year? What's your take?
See, I think yes, Poonawalla FinCorp has been a bit of a disappointing chart over the last 3 months or so. And one of the prominent reasons for that, I think, is the selling which has emerged into the stock price just around that 500 mark. And in fact, on the quarterly charts, the stock has formed a bearish engulfing pattern. So that also could probably play, some bit of a spoil sport to the trend over the near term. My expectation is that the stock in this leg of downtrend could probably drift back to that 350 mark because of the way the stock has trended. It's fallen below the 200 moving averages and then formed this bearish pattern on the quarterly chart. So I think on the back of it, might expect the stock to get into a further corrective mode, but it's a quality name. Whenever the stock makes a comeback in the next 3 months, 6 months or so, I think the comeback should be quite strong and ferocious. So I think it all depends on what your time frame is. If you're looking at another 3 months, then potentially more downside. But if you're looking at it for the next 1-2 years or more, then I think you should hold on.
All right, Avinash, the next query that I have is coming from V. Ravi Chandran, and he wants your advice on AB Capital. This stock we have been discussing for the past couple of days, but fundamentally, Avinash, do you like this stock for a fresh investment for the next 3 to 5 years?
Yeah, I think, I think AB Capital is the holding company of the Birlas, which holds considerable business interest in various financial segments like ARC, the mutual fund business, as well as the broking business and the wealth management business. So I think clearly, if the investor has a 2 to 3 year view, I think looking at the kind of buoyancy in capital markets plus the kind of money which is being raised, in the public issue as a follow-on public offer kind of route, there's going to be a huge kind of opportunity for financial intermediaries like AB Capital. So I think, you need to give in a little time and patience here. The stock has jumped significantly from lower levels. And I think if the investor can give at least say 2 years here, then I think one can definitely expect a decent risk reward. So I think if the investor is already holding on, I think he should continue to hold. I would believe that FY25 should be significantly better compared to last year. And I think even at the current levels, if one were to buy, I think keeping a 2-year view can give a decent risk reward.
All right, on that note, we'll actually slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking your queries. Don't go anywhere.
Welcome back to Buy Now, Sell Now, and let's keep it going with all your stock-related queries. And the next query that I have, Avinash, is coming in from Meetu from Mumbai. She wants a view on Navkar Corporation. Is that a good stock to make a fresh investment in Navkar Corporation? Do you believe so?
Shrishti, I think if I recollect, this company is now going to be taken over by JSW Infra. And I think possibly, we don't know whether it's going to be a complete takeover or whether it's a merger. But I think definitely long-term prospects now look quite encouraging, considering the fact that the company has got a decent, asset with it. And I think a promoter like JSW Infra can obviously get long-term tangible benefits from this acquisition. So, unless the investor has got a couple of years in mind, typically, if the investor can wait for at least minimum 12 to 18 months, I think he could definitely consider investing in Navkar Corporation. But I think one should take a long-term call here. In the short term, we are really not clear as to what is the merger strategy and how value is going to migrate for this company via this acquisition. But yes, longer term, I think definitely we believe this company will do well. So keep a 2-year view, and I think one can accumulate here.
All right, this next one is coming from Karishma. She is a regular viewer, Kunal. She has also, she's saying grateful to you all. She has 40% profit in her entire portfolio. We're just hoping that we can guide our viewers better. And yes, but you have to do your own research and your ground study while investing in a stock. Just don't go with the flow. Don't follow the herd. That one herd mentality is something that one should not have in the market, isn't it, Kunal?
Well, absolutely, yes. And I think great gains for you in terms of your portfolio. And my expectation is that if the market does pretty well, I think the gains should probably increase.
Absolutely, and you should be helping her for the next stock then. She has Servotech in her portfolio at a price of around 105 rupees per share. She's saying today the stock is reaching her buy price. Should she wait or look to exit this counter? And also SBI for a fresh investment.
Well, SBI, I think you can probably take a pause over. I mean, you can just wait and watch over here because the stock is taking a pause. I think it's not done pretty much anything over the last 2-3 months or so when you look at it relatively. So maybe from a particular price point, yes, the stock would probably have done, but the returns are more flatlined for SBI over the last few months, and I flagged off that the PSU banking index is going through a wave of underperformance. Yes, SBI has done pretty much better as compared to many of its other peers, but that also indicates that it could just be a relatively more of a defensive stock as such from the entire PSU banking pack relatively as compared to the many of the other names. So maybe wait and watch. In case if it dips down to that 830 mark, I think there are multiple occasions where the stock drifts to that kind of a territory. That could be a good point where you will have to start venturing into SPI. Servotech, on the other hand, even though I don't track the stock regularly, but just looking at the plain chart, the last 2 weeks of price and the volume action, the stock breaking past about 105 mark today, I think probably gives an indication that maybe you might be in for some sort of a momentum upside. So looking at the recent returns, the stock is up some 18 to 19%. From the recent swing lows, maybe another 10% could be in the offing. 115 odd could be a decent price where you will look to consider booking profits.
All right, moving on. And Kunal, the next query is coming in from Anand, and he wants an advice on the flavor of the day, that is the IT space, because he's been holding stocks like Wipro, Infosys, TCS. So he wants to know, are these counters hold at this price point, or he should go ahead and book some profits, or rather he can make more investments into the IT space, and if you can guide him with your top bets.
See, I would believe that it could be a good time where you may look to start chipping into these IT stocks even after today's price uptrend, because what we are looking out for is more of a potential uptrend which comes by into these IT stocks, and that too an uptrend covering up the huge underperformance which was there for many of the large cap IT names over the last 2.5 odd years. So it may not be a short-lived rally. Yes, with every upside, the stocks would be met with a lot of resistance and some selling as well. But I think eventually once the selling gets absorbed, these stocks, they would probably tend to scale past about their resistances. So the path on the upside over the near term could be a bit staggered, but I think it should be on the upside for many of these IT names. I would recommend Wipro, something which I've been recommending consistently over the last few days. That's a chart which is looking attractive at current levels. You might look out for Infosys also at current levels of I think 1680, 1685 the last I had seen for the stock. You can look out for a few mid-cap IT names. I think the likes of Coforge around the 5,500, 600 mark is something where there's been good support point for Coforge. So that's another name to look out for.
All right, this next query is actually coming for you, Avinash. This one is from a viewer, Ayappan, who's writing to us from Chennai. He's been holding 3,500 shares of IDBI Bank at an average price of around 74 rupees per share. But what's amazing that he's been holding on to this counter right from 2011. And he's been through this stock all these years, even when there was asset quality concerns for a lot of PSU counters, the correction that the space has been. And he's held on to IDBI Bank. Now he wants to know whether it makes sense to stay put with this, or should he look to exit and invest in other stock? And if you are advising an exit, then which stock should he invest in?
No, I think Cheryl, he's done a good strategy of remaining invested in IDBI Bank. In fact, I remember IDBI Bank at one point of time had a asset quality number of almost 25%. And that has now come down drastically. I think the bank has done a great job in building the balance sheet in a much better way. And now the bigger trigger for IDBI Bank is that the government has seriously considered divesting this bank to some private investor or some strategic investor. In fact, we were expecting some deal announcement, in fact, in last year's budget, but did not fructify. My sense is that, the stock looks pretty attractive even at these levels. And I think now the bank is growing quite aggressively. I think it is one of those PSU banks which is now all poised to do well in FY25. So I think, if the event does happen, there is a strategic investor or a private sector buyer who takes over the bank and the government finally divests this, investment, that would definitely be a big trigger point for IDBI Bank. So I think I would suggest to the investor continue to hold for the next 12 to 15 months. We could expect some announcements in the forthcoming budget and probably FY25 some deal announcement, and that could be a big re-rating exercise for the stock. So continue to hold.
All right, Avinash, the next query that I have is from Krishna from Bangalore, and he wants to know, is this a right time to enter stocks like KRBL or NLC for the next 1 year investment horizon? And he also wants your advice on Union Bank. He's holding 400 shares, buy price is 158 rupees, whether to continue holding this counter or exit with loss.
I think Union Bank, according to me, I think definitely if you're looking at a slightly longer term time frame, then I think the bank should do well. Here also, I think despite the fact that it's a smaller PSU bank, the asset quality has improved. The loan disbursements have also improved, and I think we are expecting very strong announcements in the budget on infrastructure, corporate capex, which presents a very large opportunity, for public sector banks like Union Bank. So I think one has to be a little patient here. Keeping a time frame of 12 to 18 months, I think one can continue to hold.
All right, Akhil wants to know, Kunal, about ZTV. He has it about 700 shares at a price of 286 rupees per share. What to do, average out and then sell on any jump?
Well, I mean, the stock is doing little nothing over the last 4-5 months. It's been stuck in this 150 pivot range, pivot support. So which means closer to 165, 170. There seems to be a lot of resistance for the stock, and on the downside, around the 135 to 145 range, the supports are quite strong for Z Entertainment. So no major trends. The stock is still reeling below its key longer term moving averages. So I think in these kind of scenarios, ideally we tend to skip trying to forecast any kind of a near-term target or upside for the stock. But since you've bought at higher levels, I would just recommend to continue to hold on. In case if there is any kind of a revival, and especially in terms of the news flow for the stock, then you might probably expect the stock to finally break this 4-5 month consolidation band above the 175 mark.
All right, moving on then, and the next query, Avinash, is from Subrata Mukherjee, and he wants to buy Man Infra, but can this be a budget pick for the short term? And if you can share your outlook on the same.
I think Man Infra is a real estate company, Shristi. So I don't know whether the government would specifically give real estate any significant boost. But I think the government is definitely looking at affordable housing segment booster in the coming budget. And I think Man Infra has got a very large order book. Most importantly, it's prominently figuring into redevelopment of a lot of projects in Bombay. It's a well-managed company, and one of the big positives for the company is that it's a net debt-free kind of company, which is very unique in the real estate space. So I think if the investor wants to take a position here, he could possibly do a small SIP here. The stock has corrected from higher levels, but I think over the next say 12 to 18 months, as more projects fructify and more projects are monetized, I think you could see fair value of around 250, 260 comfortably. So I think it's definitely a long-term kind of bet, but I think one needs to give in a little more time here.
All right, this next one is coming in from Mahindra, who is actually 82 years of age, Kunal, and he wants to know whether it's the right time to invest in Cabra Extrusions.
Well, the recent chart indicates that the stock is getting into mild recovery. So from 300 levels, it's come back towards 430, but then it's a long way away from the previous highs of 600 with the stock at in 2022-23. So I believe that the recent charts, the volumes for the stock indicate that maybe you might see the stock heading up higher from current levels. But it's not a high conviction chart as such, where you could probably look out for much more bigger position sizing. So keep your position sizing a bit more on the average side for Cabra Extrusions, and on the upside, if this pattern plays out, we could be looking at the stock coming back towards at least 500 to 530 odd range over the near to medium term.
All right, the next query that I have, Avinash, is coming in from Neeraj Verma, and he's writing to us all the way from Assam. He's a senior citizen holding 100 shares of IRDA. His buy price is 234 rupees. So indeed, he's at a good profits in this one. But can he buy more at this price point? What will be your advice?
No, I think my guess is, Shristi, the stock has jumped significantly, and I think whatever stocks he has, I think he should hold on. Although I personally feel that in the next say 2 years, IREDA is going to be a big beneficiary of the renewable energy kind of boom. The coming budget also is likely to give some bigger boost to the renewable energy sector. So I think, the fact remains that the IRDA management itself has said that possibly going forward in FY25, they would be looking at FPO, possibly to raise additional capital. So I think that would be a good time, because normally when companies make an FPO, the stock corrects, as the markets don't like more supply and liquidity as far as the floating stock is concerned. So I think probably you could time the stock when the company announces its FPO, and that would be a better way to play and get into this stock additionally, as longer term prospects are good, but the present valuations seem to be fair to expensive. So I think it's a hold. Fresh buying is not advised.
All right, this next query that I have is coming in from Thomas George from Kochi, and this one also I'll actually take it from you. Avinash, he wants to know about auto ancillary stocks. He's given me a list of stocks. He wants to know out of that, which one is the best one that he can look to invest in for the long term. And the stocks are Samil, also you have Sona Comstar, Precol, Sansera Engineering and Endurance Tech. Out of these counters, which one do you think is best fit for the long-term gains?
I think my guess is that all these companies look attractive, but I think Samvardhana Motherson looks pretty attractive if he wants to make a fresh entry. This is a company which operates not only in India but even in the US and the European markets, and I think traction in business has been very solid. I would believe that if the investor has a 12 to 15-month time frame, then I think the auto component business is definitely going to prove very profitable. And I think other companies which he mentioned, like Endurance Technologies, Samsera Engineering, these are also very good bets. But probably at lower levels, one could make a fresh entry. At these levels, I think the Samvardhana Motherson seems to be quite ideally positioned for a decent risk reward.
All right, that's the take on Samil. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. As we come right back, it's time to take your queries in the rapid fire session.
The announced coverage of senior citizens above age of 70 years also under the Ayushman Bharat.
The agriculture credit target is likely to be hiked by almost 20%.
This announcement is likely to happen in upcoming Union Budget.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking your queries then. And this next one is coming in from Ramesh, who's thinking that we will never answer his query. Apologies, Ramesh, but to be very honest, we at times get inundated with queries, but we try and take as many as possible. Ramesh is writing to us from Coimbatore, but the query that he has is on Manappuram Finance. At current price, Kunal, he wants to know whether he can go ahead and buy some more Manappuram Finance in his portfolio. He already has 2,000 shares at 185 rupees per share. And the other stock that he has is IDFC First Bank at 85 rupees per share, about 4,000 shares of IDFC First Bank. What should he do with both? Add some more in his portfolio or stay with whatever he already has?
See, I think I would suggest to stay with whatever you have, because we are getting into a zone where the markets are now getting a lot more volatile, and both of the charts have sort of underperformed relatively with respect to many of the other mid-cap peers. IDFC First Bank specifically has been a big underperformer. In the last 6 odd months, the stock has been consistently trading below its 200 DMA. So I think till the time these stocks, they don't confirm signs of a breakout for themselves, it could be a bit tricky. So I think in that aspect, just hold on to the quantity which you have.
All right, moving on, and Avinash, the next query is coming in from Samiksha, and by any chance do you track a company named Lancer Containers, where Samiksha is holding 1,500 shares, but buy price is 61 rupees at a loss in this counter, but if you can track and if you can guide her on this investment.
See, Lancer Container is a logistic company, and I think they have been doing pretty well. In fact, the investor seems to have gotten at a slightly higher level. But I think hopefully, I think logistics is one area which should do well, overall if the economy grows and GDP growth expands. So I think, they operate a very unique business model. They have been quite profitable right from day one. My sense is that, in the maritime logistic kind of industry, it's a fairly well-known player where it caters to small and medium enterprises. So I think if the investor can hold on for the next 12, 18 months, I think one can definitely expect the stock to outperform and give a decent risk reward. So I think the only solution is, I think a little bit of patience is required. The stock needs to be held on for a slightly longer term kind of time.
This one is coming from you. This one is coming from Jeshna Begum, who's writing to us from Qatar. She wants to know about IOB. She has 5,000 shares of Indian Overseas Bank at 67 rupees per share. IDFC Limited, 1,000 shares at a price of 81 rupees per share. She wants to know, is it worth holding on to these counters for a period of 1 year? What should she do? And if you think, if not these counters, she should exit, then which other stock do you think she can make good profits?
I think IOB you can consider to exit. That's a chart which has been a bit of an underperformer as such. IDFC Limited, you can hold on. As I said earlier that IDFC First Bank, these stocks have underperformed, but there could be a potential upside which you can expect for the stock in the near to medium term, because I think these stocks have gone through a good patch of 1.5 odd year of underperformance. So I think that aspect, maybe these stocks very recent, pretty soon could make a strong comeback for themselves. On the other hand, if you're looking out to shift from IOB, then I would probably recommend going with either a private sector banking name like ICICI Bank if you're in from a longer term play, and if you just want to stick to the PSU banking lot, I think either a Canara Bank or an SBI could probably be a better bet, at least relatively, as compared to IOB.
All right. The next query, Kunal, is on IRCTC, wherein Venkata Pavan has been holding the stock from an average price of 992 rupees, and it's been more than a year that he's stick to this counter. Just a while back, he got his buying price back. So how is the stock looking like to you right now, and any targets that he should look out for?
See, I wouldn't expect fireworks in the likes of IRCTC, and I think as compared to many of the other railway stocks which have done exceptionally well for themselves in the last 3 months, 6 months, 1 year or so, IRCTC has given more subdued returns relatively. So I believe that the near-term performance could probably continue for the stock. What you can probably look out to do is, in case of the stock rallies towards 1100, 1125 mark, which is the previous swing high for the stock, that could be a point where you look to book profits and then keep on trading into a range. So say 975 as a downside could be a good support, and on the upside, as I mentioned, 1125 could be a good resistance.
All right, with that, let's kickstart taking your queries in the rapid fire. And this one is coming from Sanjeev. Kunal, for you, he wants a view on PSU banks for 1 month and 3 months, specifically for PNB Bank of India. What's your take coming in on these counters? And I think he's still holding on to them.
Yeah, if you're looking at it from 1 to 3 month perspective, I would suggest an avoid.
Alright, Avinash, what's your take on Sanofi India? Sundar Raman wants to know, is this a good stock to buy for the next 3 years?
Yeah, I think if the investor has a 2 to 3 year kind of time frame, this is an MNC company, and I think doing pretty well. I think in the pharma basket, I think clearly, I think the markets are looking at solid earnings growth and plus a very large dividend payout, from this MNC company. So I think continue to hold.
This was coming from M. Natarajan. Kunal, Easy Trip Planners, 600 shares at 50.5 rupees per share. Should he hold or average? He's a long-term investor.
I think you can look to exit if the stock breaks below the 40 level.
But Kunal, the next query is on HEG, wherein Jay is holding the stock from a price of 2,300 rupees. Is it worth averaging at current market price?
Yeah, looks good for an average.
All right, Kunal, short-term target for Adani Energy. Viewer has it from 1,100 rupees per share. Viewer's name is Srinath.
I think you can look out for 1,030, 1,035 as a near-term target.
All right, Elite Digital is the next counter, Kunal. If you can just check, Nalini from Chennai holding 30 shares, buy price is 132 rupees. In the short term, how do you see the stock to perform, Elite Digital?
I'm sure, I'm afraid I don't track it.
All right, this one is coming in from Balan. He has about 1,000 shares of Bank of Maharashtra. He's saying it's stagnant. Does it make sense to go ahead and buy Canara Bank instead, Avinash?
So I think my guess is, investors should give in a little more time. Bank of Maharashtra is doing reportedly extremely well. Possibly, if you can hold on for the next 6 to 12 months, you could expect a decent outperform. So would prefer to, make the investor hold on here, better prospect side.
And Kunal, what's your advice on Zomato, wherein Smita is holding the stock, buy price is 186 rupees. Continue to hold on or book profits?
Continue to hold on.
All right, with that, we come to the end of Rapid Fire as well as queries. Thank you so much, Avinash, as well as Kunal, for patiently answering all the queries. Thank you, Kunal, for the Buy Now, Sell Now Pathshala. And with this, viewers, we come to the end of this week's edition of Buy Now, Sell Now as well. So it's a goodbye from Shrishti, our producer Sumashri, our director Santosh, and myself as well. Thank you so much for watching.
If you like this video, then like, share and subscribe to ET Now.